Does everyone have the document? Thank you very much. We would like to begin the earnings announcement. Thank you for joining us today for the announcement of Nissan's first quarter earnings for the fiscal year 2017. I would like to ask Corporate Vice President Tagawa-san to make a presentation of the business update. After the presentation is over, we are going to entertain questions from the floor. This press conference is broadcasted through the internet. Thank you for your understanding. Tagawa-san, the floor is yours. Yes, good afternoon. Thank you for joining us today for the announcement of Nissan's first quarter earnings for fiscal year 2017. I am Joji Tagawa, in charge of IR. Today, I will outline our headline figures, our global sales performance, and financial results for the 3-month ending June 30th, 2017. Following the presentation, my colleagues and I will be happy to take any questions you may have. For the first quarter of fiscal year 2017, Nissan is reporting satisfactory results despite rising raw material costs, lower industry volumes in the United States, and slower than expected growth in China and the Middle East. Our performance in Europe was also impacted by the timing of model changeovers. These negative issues offset healthy demand in Japan and continued cost efficiencies in our business. Overall, results were in line with our expectations. For the 3-month period to June 30th, consolidated net revenues were 2.76 trillion yen. Operating profit totaled 153.3 billion yen, which equates to an operating margin of 5.6%. Net income was 134.9 billion yen, which represents a 4.9% net margin. Free cash flow for the automotive business was 112.6 billion yen, and we ended the period with an automotive net cash position of 1.646 trillion yen. Turning to our sales performance, global total industry volumes reached 23.21 million units, an increase of 1.8%. Nissan's total unit sales were 1.351 million units, an increase of 5%, primarily due to the positive growth in Japan. Our global market share rose by 0.2 percentage points to 5.8%. Looking at our key markets in details. In Japan, TIV rose by 11.8% to 1.2 million units. Nissan saw unit sales rise by 45.6% to 131,000 units, resulting in a market share improvement of 2.6 percentage points to 10.9%. Conditions continued to improve following the resumption of K-car sales and with strong demand for registered vehicles, including recently launched models such as the Note e-Power and the new Serena with ProPilot autonomous driving technology. As we move through the balance of the year, we expect to improve our market performance with new models, including recently launched refreshed X-Trail with ProPilot autonomous driving technology in June and all-new Nissan Leaf, which will be unveiled in September. In China, where our sales performance is measured on the calendar basis, Q1 TIV was up 5.2% to 6.64 million units. Nissan sales increased 5.3% to 314,000 units, representing a market share of 4.7% for the quarter. The increase in sales was primarily due to the Qashqai and Sylphy. As China is reported with a 3-month lag, we also have the sales figures for the Q2 period. TIV decreased 1.2% to 5.96 million units, and our sales increased 8% to 336,000 units, and our market share was 5.6%. For the 6-month period to the end of June, TIV increased 2.1%, while our sales increased 6.7% to 650,000 units. In North America, TIV decreased 2.1% to 5.4 million units. Nissan outperformed the market with unit sales of 532,000 units, an increase of 0.6%. In the United States, TIV was down 3% at 4.42 million units. Nissan sales increased 1.2% to 403,000 units, equivalent to a market share of 9.1%. The increase in sales reflected continued demand for our SUVs, particularly the Rogue and recently launched Rogue Sport. In Canada, Nissan's unit sales were 4.6% to 41,000 units. Market share was flat at 6.7%. In Mexico, Nissan's unit sales decreased 3.7% to 88,000 units, but we maintained our number one position with a market share of 24.1%. In Europe, including Russia, Nissan's sales totaled 185,000 units, an increase of 1.1%. Excluding Russia, Nissan sales decreased 0.2% to 162,000 units. Market share was flat at 3.4%. This performance was expected as we prepared for model changeovers of the Qashqai and X-Trail. We expect sales to improve as a result of the introduction of refreshed Qashqai and the X-Trail at the end of the quarter and in July, respectively. In Russia, Nissan sales increased 10.8% to 23,000 units, resulting in a 5.9% market share. In other markets, Nissan sales increased 1.2% to 188,000 units despite volatile demand in some markets. Other than the Asia-Oceania region, Nissan outperformed the market. Unit sales in Asia and Oceania decreased 1.2% to 83,000 units. Sales in Latin America were up 14% to 43,000 units, and sales in the Middle East were down 5.8% to 42,000 units. Sales in Africa and others rose by 1.9% to 20,000 units. Moving to our financial results, as with previous quarters, Nissan is presenting its financial performance under the equity accounting method for our joint venture in China. On this basis, consolidated net revenues totaled 2.76 trillion yen. Operating profit totaled 153.3 billion yen, which equates to an operating margin of 5.6%. Net income was 134.9 billion yen, which represents a 4.9% net margin. Looking at the operating profit movement in further details, we have adjusted for the 6.1 billion yen impact from the divestiture of Calsonic Kansei. Forex had a negative impact of 2.1 billion yen. Raw materials had a negative impact of 19 billion yen. Volume and mix produced a positive impact of 18.1 billion yen. The increase in marketing and selling expenses resulted in a negative impact of 50.8 billion yen. Cost items, including purchasing cost reduction efforts and product enrichment, it resulted in net savings of 48.2 billion yen. R&D and manufacturing expenses combined increased by 7.1 billion yen, and other items had a negative impact of 3.7 billion yen. On the management pro forma basis, which includes the proportionate consolidation of a Chinese joint venture, our key indicator shows that net revenues totaled 3.03 trillion yen for the quarter. Operating profit was 185.7 billion yen, which equates to an operating margin of 6.1%. Net income totaled 134.9 billion yen. Automotive free cash flow was 128.3 billion yen, and we ended the period with automotive net cash of 1.825 trillion yen. In summary, Nissan delivered satisfactory results for the quarter despite rising raw material costs, lower industry volumes in the United States, slower than expected growth in China and the Middle East, and the impact of planned model changeovers in Europe. We had been encouraged by the improved performance in Japan and the positive reception in the current quarter to recently launched products. Going forward, we anticipate improving demand in several key markets given the impact from recently launched and new models. These include the recently launched Rogue Sport in the US, as well as the Kicks, Navara, X-Trail, and Venucia M50V in China. We also introduced the refreshed Qashqai and X-Trail in Western Europe, where previous models have been bestsellers. In Japan, we recently launched the new X-Trail with ProPilot autonomous driving technology, and the all-new Nissan Leaf will be unveiled in September. We also expect continued and growing benefits from our alliance with Renault and Mitsubishi Motors. The alliance recently announced a 16% increase in 2016 synergies to 5 billion euros, and we are seeing encouraging synergy gains from our collaboration with Mitsubishi Motors, particularly in the ASEAN region. We continue to maintain our focus and strict cost discipline, which will result in further operational efficiency during the remainder of the year. Although we face market uncertainty and rising raw materials costs, we expect to deliver solid earnings and free cash flow generation in fiscal year 2017. And last month, based on their favorable view of Nissan's profitability and stability resulting from improved brand recognition and product competitiveness in key markets, as well as demonstrated cost efficiency, last month S&P Global Ratings upgraded Nissan's long-term and short-term ratings by one notch to A and A-1 respectively. For the full fiscal year, we are maintaining our previous guidance, and we continue to project a full-year dividend of 53 yen per share, a 10.4% increase from the prior year. Thank you for your attention. Thank you for the presentation, Mr. Tagawa. Now we would like to take some questions from the floor. If you have a question, please raise your hand. We will bring you a microphone. Please use the microphone when you are asking a question. Thank you for your kind understanding. Please limit yourself to 2 questions per person, if possible. Thank you for your kind understanding. Any question from the floor? Nihon Keizai Shimbun. My name is Hoshi. I have a couple of questions. The first one is about the financial results. Second one is about electrification. Starting with the first one, in the first quarter, looking at the financial result, the U.S. market is slowing down. And this was reflected obviously in your results. In the first quarter, based on the result on the first quarter, how do you summarize the result of the performance between April and June? You said that China, you talk about China in the presentation. In China, there seems to be peak out, and there is a regulation coming. So what is the status of Chinese business, and what's the projection or outlook of Chinese market? This is the first question. And the second one, from this month, France, 2 days ago in UK, mid and long-term diesel as gasoline car regulation or restriction policy was announced by the government. From Europe, electrification will be accelerated as a trend starting from Europe. In June, AGSM, Saikawa-san said that in the Nissan major models, we are going to electrify them with EVs. And looking at the latest trend, which is starting from Europe, with regards to restriction of gasoline cars, what's your electrification policy, including the outlook of Nissan? Thank you for your question. Starting with the first quarter performance, let me assess or make a comment of the summary. With regards to China, today, Chinese business Seki-san, who is an SVP in charge of China, is here, so he will talk about what he sees today and the outlook in China. And electrification will be mentioned later. Starting with the Q1 result. Compared to, I think the performance was in line with our initial expectation. As you indicated, the TIV in US is falling. And China and the Middle East didn't grow as much as we expected, or it was even a negative in some places. But for us, the Japanese sales were strong and our cost efficiency excelled, and these positives offset the negatives. So that's why the overall results were in line with the expectation. With regards to volume, it was 5% growth compared to last year, while TIV grew by 1.8%. So we increased the market share by 0.2 percentage points. So the progress rate of the full year, in terms of progress rate of the full year, net income is progressed by 26%. However, the volume and the operating profit has a progress rate of about 23%. So it's a slightly slow compared to what we anticipated. As you said, impacted by the users volume drop. Not only this, but the competition is intensifying, which means that we have to spend a lot of selling expenses. So these are some of the reasons that we see. However, the new car launches or the recently launched vehicles are enjoying are affecting the performance. Seki-san may talk about this. In China, second quarter is over and we are seeing a sales recovery in Q2. So as I said, Europe and in other regions, we will enjoy the new car impact eventually, and we believe that we intend to make a recovery. Okay, once I would like to bring the microphone to Mr. Seki to talk about China, and I'll come back with electrification answer. Thank you for your question, Hoshi-san. With regards to China, where are we today? Here on page 5, as you can see on the slide, the TIV in Q1 increased by 5.3%, but in Q2, it's a negative 1.2%. So it was a decline in Q2. It's not indicated here, but in the first half, it's 2.1% on the first half. Compared to our expectation, this is 2 percentage points or 3 percentage points lower. So against such backdrop, in the first half, 5.3% and 8% in the last half of the year. So 6.1% growth is what we are intending. We increase the market share by. So there are two drivers here. One is Nissan brand, Sylphy, Tiana, X-Trail, Qashqai. These are the core models are very strong in the market, so all the models are growing in the market. And the second driver is Venucia brand. From the end of last year, we started the new car offensive, and this is demonstrate the capacity, and there's a growth of 10% in the first half of the year in China. The local brand TIV is growing by 6 to 7%. So we are outperforming the local brand TIV with Venucia brand. Nissan and Venucia, as well as LCVs, are outperforming the TIV. So in all the categories, we are competing effectively. That's how I summarize the result. In the second half of the year, in the first half, TIV fell, and one large reason is 1.6 liter and lower cars are not purchased much, because in Q3 and Q4, once again, there will be a last minute demand, I believe, because last year 10% tax credit came down to 5%, but from the beginning of this year, this came down to 2.5% of tax credit. But because the cars are expensive, even with the 2.5% tax credit, this will give a big discount for the consumers. So in Q4, we believe that there will be a last minute demand, which will be pretty large. So throughout the year, 5% will be the annualized rate. It's a 28 million units TIV, which makes 5% is 1.4 million units of growth for the new cars. Compared to last year, the degree is smaller, but 1.4 million units growth is pretty significant as an absolute number, so we would like to capture this. For the second half of the year, our biggest challenge is to make sure that the core models and the Venucia cars, which are gaining momentum, should be kept. And we are introducing new cars in other categories. Last month, Navara Quantum Pickup was introduced. And this month, on the 18th of this month, Kicks is coming. Kicks came. In the second half, Venucia new car. There will be 2 new cars from Venucia arriving. With these new cars, we are going to grow further and hit 1.48 million units for the year. Thank you. That's all from me.
Hi.
Thank you. Does that answer your question? Okay, let me talk about electrification. We want to be a leader in zero emission, and that's one of the goals of the midterm plan. And in reality, starting from Nissan Leaf, mainly around EV, in the EV market, we are a leader so far. Having said that, in reality, compared to the initial expectation, the volume is lower. There are different reasons behind this. For example, driving range concern, or high cost, or infrastructure development are some of the reasons behind this. As you indicated, in Europe, electrification trend in Europe, or also US, Tesla, American car maker, is changing the impression of EV among the consumers. This is good for us we welcome this because unless you test an EV, you don't know how beneficial it is, and you may be worried about driving range or high price before you test the car. But now people are more familiar with EVs. So after they actually test the EV, people feel that driving range is not a real concern, especially in Japan when we have a good infrastructure. Charging is not a problem at all. And many car makers are pursuing electrification, which will result in overall cost reduction, including the supplier's cost. When this happens, there will be higher competitiveness, price competitiveness. So the slow start of EV sales may accelerate at one point of time. In that sense, the real determining moment is coming. So EV is the area where we are a leader. That's what we are saying. But other car makers will enter, other companies will enter, and as a result, we have to make sure we are the real leader still. One of the answers or solutions is the new Nissan Leaf, which will be unveiled on the 6th of September. Driving range and the e-pedal, ProPilot. There are a lot of features on this new Nissan Leaf. So with this new car, we would like to accelerate the trend of electrification. Lastly, this is part of electrification. E-power, which is e-power. E-power, it's gives a EV driving feeling, but there's no driving range concern. That's what the customers are saying about e-power. So it's not only about EV, it includes e-power. By using different technologies, we would like to accelerate the electrification trend. That's our intention. Thank you.
はい、ありがとうございます。
Thank you very much. Next question, please. Aoyama of Asahi Newspaper Company. I have two questions. First of all, it's related to the first question, but the U.S. market, the situation in the U.S. market. Number of units is growing, but incentive is also growing, and there is intense competition in the second-handed car market. So whilst you are growing number of units, how can you sustain profitability? And that's going to be even a bigger challenge in the second half, or an even important challenge. First and foremost, could you give some more details with regards to the situation of the U.S. market, and how do you intend to sustain the profitability? Can you give us the detailed and plans for specific measures? Second question, number of units, global sales units. You're not necessarily aiming to become number one in terms of units, and I believe that's your strategy, but the number of units is growing, and Mitsubishi also has recovered in Q1. MMC has recovered, but in this calendar year or in this fiscal year, is there a possibility that you will defeat Toyota? And what are your prospects on that possibility? Thank you very much. Let me take the Renault, the Trilateral Alliance. Right. By the way, number of units of alliance, including Avtovaz, is increasing with all of us together. But frankly speaking, are we number one, number two, or number three in terms of sales units? Personally speaking, I'm not even interested. And that's not really an important performance indicator for the company either. Carlos Ghosn and Mr. Saikawa is saying on many occasions, but what's important is if size increases, then how can we leverage the size? And how can we generate and maximize synergy out of the size? Just sheer size means becoming bigger, and that's it. And this is related to the first question. Even if the size goes up, no profit. And even if the size goes up, if we cannot generate value, then it's meaningless. Do we become number one, or when do we become number one in terms of sales units? I'm not really particular, and that's not my personal priority either. That's my frank view. Now, coming to your first question on the U.S. market, as you have rightly pointed out, first of all, the number of units. At the beginning of the fiscal year, TIV of US was set up at 17.5 million like the previous year. And it's gone down to the second half of 16 million. So there is intense competition, and therefore incentive expenses is going up because of intensified competition. So the bar is higher, as you have rightly pointed out. And in our performance, one of the big challenges of the incentive going up is the incentive in the US market. And you were talking about the macro. 16 million, second half of 16 million. How do we interpret this? If we look back at the past 20 years of the US market and TIV fluctuation, I found that the average for 20 years is 19.5 and the 10-year average 14 million, 14.6. So last year it was 17.5 million. So it's gone down by a few percentage points, and people say there's a slowdown, but not a significant slowdown. If it's a big plunge like the Lehman Brothers fall of 10 million, then that would be a concern. But I don't think this is a degree of decline that would give us some concerns about the US market. So rather than trying to reduce the number of units and reduce the expenses, we would like to screen and target the number. And there would be a long-term plus because car park system and the number of units going up. So those are some of the measures we intend to implement. And you mentioned the second-hand market. And as far as the Q1 is concerned, in the second-hand market, we haven't incurred a huge loss. And there are several indices, and up to Q1, we have not seen any significant deterioration. Yesterday and the day before, GM and Ford announced their results, and we looked at it, and they are saying that the U.S. second-hand market is not a loss-making market. So at the moment, so far, it's not become a big problem. But if TIV is going to go down from 16 million or off-lease cars going up in the second-hand market, further deteriorating the price levels of the used car market, then it's a concern. So we have to monitor the situation very closely.
Thank you very much. The person at the front row, please.
本日はありがとうございます。豊
Yes, Toyo Keizai Kigawa is speaking. I have a couple of questions. One is about electrification. I would like to ask for your elaboration on electrification. For example, Volvo is working on the pure gasoline cars and diesel cars, ICE cars. In 2019 onward, they are going to terminate these gasoline cars and ICE cars. That's what they say. So ICE cars, what will happen to ICE cars in your lineup? Because you have an e-Power, which is very popular in the Japanese market, I understand. ICEs will be replaced with the e-Power eventually, but including Japan across the globe. What are you going to do about ICE? When there's a trend where people are trying to withdraw from ICE in 2030 or 2014, is there any timeline of withdrawing from ICE? What's your policy here? And there's another question, which is about autonomous driving. ProPilot is equipped on many models eventually, I believe, but across the globe, level 3, commercialization of level 3 of autonomous driving starting from Audi 8 will start from this fall, I understand. So in Nissan, in 2018 and 2019, you have the milestones of the autonomous driving. When will level 3 or level 4 autonomous driving come? Is there any specific idea that you can share with us? Driverless car is done for the commercial vehicles with DNA, I understand. But when it comes to the personal use, autonomous driving, what's your intention? Thank you for your question. Electrification. ICE. When are you going to withdraw from ICE? How much of the ICEs will be replaced with other solutions? This year, around fall, next midterm plan will be unveiled. So when we made a financial announcement of full year in May, CEO Mr. Saikawa gave a framework: revenue growth, profit goal and the cash flow goal of the next midterm plan. And we said that we will talk about the contents when we are ready at later date. So how much are we going to shift our resources to electrification? Or specifically, do we have a numerical objective to do what? I mean, today we are scrutinizing this today in the process of development of new MTP. So when we make an announcement, we will agree on the internal goal, or we'll say alliance partners, Renault, Mitsubishi Motors. Together with these alliance partners, we should be making coordination and adjustments and agree on the direction or a common goal of alliance. Because Mitsubishi Motors has a plug-in hybrid and we have an EV as well. Maybe we can ask other partners to use these technologies. So ICE, for the time being, I believe we will retain the ICEs for the time being. So the specific numerical goals will be unveiled when we are ready with the new MTP ADAS. Not only ADAS, but autonomous driving, level 3 and level 4. There are a lot of efforts underway, and we are exploring different directionalities within the organization together with Renault and Mitsubishi Motors. Therefore, today, I am not ready to say something new about whether it's a policy. I'm not going to do that today. But in the near future, once we have a conclusion, I would like to show you what kind of level of autonomous driving will be available when. So please be patient.
はい。
Okay, thank you very much. Anyone else with a question? Yes, the person over there at the back.
日記
Nikkei, my name is Asada. Autonomous driving. In 2018, you're saying that you'll have a multiple lane autonomous driving, and in 2020, you'll have the autonomous driving on the city drive. And you are making a progress in accordance with this plan. Are you on track? Could you elaborate on this? Yes, thank you for the question. In 2018, we said that we will have an autonomous driving on the multiple lane of highway or intersection on the highway. That's a level of AD which we are introducing, and this remains unchanged as an objective. And specifically, specific product plan are already discussed internally. So when we are ready, we are going to make an announcement. It's about next year. So as of today, we can say that we are on track with 2018 milestone. When it comes to 2020 city driving, not the other day, as we have, there's no change from what we announced earlier. Technically, I don't know, things are evolving. Every day, depending on the circumstances, we have better adaptability. So city driving, when it comes to city driving, autonomous driving, for example, we have to make sure there are regulations and restrictions to be followed in each market. Is this a special economic zone, or do we have to do it in the general public, or we do a trial in the limited space? Technical evolution and safety level should be reconciled. This should involve the regulators and government. So we have to agree with these stakeholders. So in terms of technology, 2018, multiple lane autonomous driving on the highway, and 2020 city driving, autonomous driving. We believe that we will have the technological ability that will satisfy the requirements by then. Thank you very much.
ございます。他にご質問ございますか。
Any other questions? Shiraishi of Nihon Keizai newspaper company. It's related to the previous question. In UK and France, ICE cars may be banned after 2040. And in China, the discount in NEV regulation, or in the US, there are some regulations. And do you think that electrification is being promoted mainly driven by regulations? In some parts of the US, OEMs are rejecting a very stringent regulation. But on the part of Nissan, as more stringent regulations are being announced by various governments, what's your reaction? The automotive industry, be it safety criteria or fuel economy, There are several standards and regulations, and we need to comply to all of those rules. That's the nature of this industry. And as you have pointed out, NEV, ZEV, and CAFE C, there are several regulations, and in the end, emission has to be reduced and fuel economy improved, and like EVs, no fossil fuel use. That's the broad direction. We want to proceed towards such orientation. And not just governments imposing regulation, but they're also offering incentives like support and subsidies. And then that's very positive for us. We welcome such moves by governments. In the end, which portion will be more challenging? And this is the kind of desirable regulation. Yes, at the working level, we do have such desires, but in the end, they are to decide. So all we can do is to react to the regulations and comply as quickly as possible. Evolution of ICE alone cannot catch up with the regulations, and maybe it's too costly. So EV or e-power is being mixed in our responses to those regulations. So those are the reactions that we will be taking against any new regulations that the government announces. That's our basic attitude.
Thank you.
他にご質
Anyone else with additional question?
よろしいですか
No?
はい。
Okay. Seems like there's no one else with a question, so we would like to close the session. Thank you for coming all the way to our global headquarters. Thank you very much.